Good afternoon, this is Giuseppe Basile. I'm the analyst and trader you can find at the blog FibonacciStalking.com. I post regularly on Twitter using the @Fibstalker nickname. Good morning, today is Sunday, November the 11th, 2012, and it's 3 p.m. Italian time. This is Fibstalker View on Currencies. This is part of the free newsletter I distribute to my subscribers. And this video is a review of the dollar index plus 4 pairs, and somehow integrates the weekly euro dollar review, which is part of this newsletter as well. I want to remind the viewers that I only send this information to my subscribers. You can go on my website and subscribe the newsletter. I usually post this information only 6 days later, so as the analysis you are going to see here is going to provide setups which can be useful during the week. I suggest you get this information timely, and you can do this by subscribing the newsletter to the newsletter. So let's move quickly. What you see on the screen is the weekly chart of the dollar index future continuous contract aligned to the December expiration. I've noticed last week this level of support in the 79.20 area, which never got to the first target in the 85 area. Price came back in the last 3 months and tested again the support area in 79.20, and it's now guiding higher. I believe the move in the dollar will be stopped by this level of resistance at the 81.60 area. Let's move to the daily chart, and on the daily chart, last week we identified 2 levels of support. The first one was the 79.70 level, and he hit the first target in 80 area, and we were looking for a test of the 200-day moving average or the 81.32 area. Again, I want to draw this level of resistance in the 81.60 area, and I believe this level is going to stop the move higher if price gets there. However, you will remember that last week I indicated an extension setup. It was respected on Tuesday, but then Wednesday we had the news of the Obama re-election, and there was this spike lower, which basically screwed the setup here. So that's what stop are used for. And I then observed that price went to test this next level of resistance, 80.40, which is the next traditional long here, and our price almost approached the 81.20 area, which is the first target. So what I expect is price to keep moving higher, and if you review the euro dollar weekly review, you'll see that this would correspond to a test of the 126.20 area in the euro. So that's what we expect for the dollar. Let's move to the pound versus the US dollar. On the weekly chart, we have this huge consolidation at lows. We expect the pound to go higher if and when weakness in the dollar will resume. So we have this level of resistance here, which is an extended level area between 168.40 and 164.30 area. So this is a level of resistance, but in the last 2 years, basically, and especially in the last year, the pound also showed another level of support, which is 152.70 area, and this was respected in 2011 and 2 times in 2012. So it's quite an important and strong level of support. I want to make you notice that this support and long setup has a target in the 178.79 area. So if this seems too extreme at the moment, if we get extreme weakness in the dollar, this is possible, and something similar can happen to the euro as well. So if we move to the daily chart, you will remember that last week I indicated this setup. I still have it on the screen, and the pound actually got to the 159 level as we were expecting. So if you got into this pair last week, even if you got in on Monday, you should have taken a profit here. Let's move to the Aussie dollar versus the US dollar, and you see that we have here a wedge at highs, and the level of support is provided by these Fibonacci tracement here, and as you can see, the 95.70 area has been respected in 2011 and more closely in 2012. So this again is an important level of support. For this pair, we expect much higher prices, especially if the dollar will be weak as we anticipate. And I want to show you where this pair can go, and to do that I need to scale the chart, and as you can see, we can go to 117.90 area, and that's the first target of this big move. We could get there in 1 to 3 months time span. If we move to the daily, we will see that I want to show you what I suggested to you last week. I suggested to stay away from this pair. The reason is that we identified the support level 103.70 area, sorry, 103.30 area, and I said that this would be a good support. The reason why I said also to stay away from this pair is that we were still expecting strength in the dollar, and we had this level of resistance here. It was respected 1, 2, and 3 times. So I said that the price could move within this area between 103.30 and 103.70. However, price was able to win this resistance area, and also confirmed upward targets here, because as you can see, the 104.43 level was violated on the upside, and actually the price also got to this first target 104.20. So sorry, 104.60. So I was wrong in this pair. I mean, I was right on the support, but I thought this would move laterally because we would have seen more strength in the dollar, so in the US dollar. But this pair is relatively stronger, so the Aussie is relatively stronger than the dollar at the moment. So what we can expect here is a trade. I have 2 levels of support for this pair. I mean, the first one is the next traditional long, and it got already participation, so it means that this level is meaningful. As you can see, price came to 103.60, and then it bounced higher. As I said, we have this level of support here, which is very important, which is also going to identify the next target higher. So when the market will eventually leave this sideways move, especially when we start getting weakness in the dollar. So this is the first level of support I see, with a stop below 103.70, and the second level is further retracement into the 103.20 area. So these are only the 2 levels we can expect the Aussie to bounce from, but probably the Aussie will not go below 103.30. And let's move to the Canadian US dollar versus Canadian dollar, and the weekly chart. We have again this wedge at lows, and we expect lower prices here because we expect the US dollar to be weaker than the Canadian dollar. The Canadian dollar has been relatively stronger than the US dollar, similarly to the Aussie. Here what we saw was I identified this level of support. It got to the first target, and then I was expecting more strength in the dollar, US dollar, so I also indicated this new support in the 99.30 area, and we got participation, and then eventually it failed, and on Wednesday we had this fake move lower. I consider this a fake move lower because it was only a reaction of price. Nevertheless, I mean, it would have stopped us out, and the market went to test the 98.76, which is the current setup. I do not expect price to retest this level because the US dollar is going to be weak in the next few days, I believe. So the 10090 area is the target area for this move. And we close with the Japanese US dollar versus Japanese yen. Again, we have this wedge at lows, but this should be a reversal figure, a reversal pattern, because we expect more weakness in the dollar than what we are going to witness in the Japanese yen. And actually the Japanese yen was much stronger this week, much stronger than the US dollar. And last week I was able to identify this resistance level. I told you the price would not go above 80.60, and so price moved lower but was not able to test this support level. So if price comes back higher before testing the 79.90 area, then I would be very interested in shorting this market in the 79.80 area here for a first target in the 78.70. Okay, that's it. I hope this video is interesting. I'm gonna send this video on the blog, to my newsletter subscriber this evening, and you can only see this if you are a subscriber. So go to my website and subscribe my newsletter. Thank you very much. Fibstalker view on currencies ends here, and I wish you a very good Sunday and a very good trading week. Bye bye.